What is going on, everybody? In this video, we're providing a state of the market in stock picks for March 3rd, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So another eventful day in the market. Things this morning were quite interesting, as we've had the jobless claims that came in. Let's see, jobless claims came in at 190K versus previous 192. Consensus was 195, and forecasted was 193. So that came in today. The non-farm, the actual is 1 point. Quarter over quarter finals 1.7 versus 1.4. And then the forecasting is 3. So with that being said, again, it's going to be interesting. We do have, I am recording this a little bit earlier. Here in about 5 minutes, we're also going to get Fed Waller talking as well. So he's got a speech today. I'm sure the markets will be a little volatile when he speaks. The market is very volatile. It looks like there was some actual short covering today. A lot of sell pressure. I'm going to actually bump this up to the daily here real quick. There's been a lot of sell pressure coming into today, and today's the actual first bounce. We are coming into the 200 EMA daily here, roughly sitting around 4K. Looks like we briefly got rejected off that. I think ultimately right now what we're looking at is we're setting up for next week. I expected a bigger pump, but considering we've been kind of sitting on top of the 200 and the 50 EMA on the daily, try to give it some space. Now we're getting a bump back up because we've hit pretty heavy support here at the essentially the 39.41. Getting that bump up. Question is tomorrow, if we can't break back above this, that's your break retest. We could start dumping tomorrow. Like I said, next week is going to be a big week. You're going to get a lot of big weeks following that, as we start off with Powell on Tuesday for this testimony. And then from that point, that's early too. I believe it starts at 10 a.m. Eastern Standard Time. And so he's going to get some really, really tough questions on the actions that the Fed have been taking to essentially combat inflation. So that's going to be very insightful. It'll be something to not miss, as we are in a very pivotal stage right now. So essentially what he says in that meeting is going to could be very troublesome for the market. Is, he started talking about disinflation and all these other things, and then we started getting hot reports right after he talked about that. And they came in with a 25-point basis move. So he's going to have to answer for those moves. And with that being said, what is going to come of that? They're projecting that September is 5.5 rate increase. They're expecting either a bigger rate increase or multiple rate increases as well. But again, I don't think we're going to end there. I think these next couple inflations are going to come in hot. I think the expectation of what was kind of presented in that last monetary policy led a lot of people to buying. So you're trying to kill demand, and then if demand is returning, we're kind of seeing a little bit of a spike of demand. And was that driven by only the 25-point basis move? And so now you're seeing a spike of inflation come back, and so that's not a good sign, especially if we have seen a little bit of an uptick in savings as well, which is interesting to see. If people are working multiple jobs, maybe they're able to save a little bit more, or perhaps not reporting some income somewhere could be a possibility as well. But nonetheless, again, things aren't really adding up, and you're starting to get what could be a really nasty cascading effect. If Powell says something, I think he could say something and kind of walk back what he said in his last monetary policy, which could be troublesome for the market. And maybe he says, well, maybe we have to consider adding 50-point basis move, anything along those lines, or adding a couple additional rate increases that resets the clock and starting before the core. And then that will be interesting to see. The market might take that really bad, and then the projections of what this year could be, you have to remember at the beginning of this year, they were projecting that we're going to have a pivot, and that just wasn't going to be the case, right? The market wasn't taking into account that things are going to get sticky at some point, and that's going to be it. And so now you're setting up this whole thing. Well, the market thought it was going to run up. Now it's like, oh, wait, now reality is setting in. This is what's really going to happen. And now we're starting to see that. And it'll be interesting to see just Powell's mentality coming into next Tuesday. And then from there, whatever we get from there in the backlash or whatever after that, we will have non-farms. Non-farms, again, if it shows a lot of strength, that's going to be a negative sentiment as, again, Powell can come in with a 50-point basis move or 75-point basis move because the market can take it. And if inflation, and then right after that, you're going to have core inflation. And if inflation's hot, you're looking more at a potential, depending on how hot it is. If it is hot, you're potentially looking at a 50-point basis move again. And again, if it starts creeping in the sevens, you're going to draw a lot of panic. But if it does remain sticky and sit around 6.5, you may even still look at 50-point basis move or considering adding more 25-point basis moves. But if it comes in lower than that, that will be a good sign. The market could really rocket off that. But again, there's a lot of different scenarios, and so you can see where this thing can get. Can really explode either way because it's going to be a very pivotal event on that next core. And then obviously after the core, you're going to have monetary policy and be able to determine what rate increases we're going to need from there. So in my opinion, what's essentially the final say and everything that's going to go on is the core report that comes out next week. That is going to be, or not next week, but the week after that, that is going to be the extreme. That's going to be the directional pivot. And again, if that's bad, if inflation starts creeping up, it's going to be an issue. And again, I think a lot of stuff was premature, just the way the Fed took everything. The market took it that way. And so they started pushing demand back up on some things. And I think that was the problem that has occurred, right? And so demand started coming back. Again, it's going to be a major issue. So nonetheless, tomorrow is only Friday. I will get more in depth with a lot of that stuff on the weekly updates, what to expect for the week. Again, there's going to be some big pivotal stuff going on next week that we really need to watch about, primarily with it's going to be led by Powell and then followed with non-farms. So I have to check that out and see what's going on. Again, technical wise, we are retesting the 200 here. So we really want to see what happens here. Again, we could potentially push up to the 404. I don't really know if we're going to see that. It's roughly around that 420. I think we've got headroom for 420. So maybe tomorrow we may get a little bump up to 420 and then watch this thing just roll over and then potentially down to the 3,900 and then see if that holds. That will lead into Powell, which could potentially break us down to the next level, which could lead us up to the 3,800. Which could lead to non-farms and core. If that doesn't play out, if core is bad, you can see a break of the 3,800 and then continuing down to the next levels. So that's kind of what I'm projecting to see. So technical wise, it's kind of playing out along with the events that are occurring. But again, right, if we get a bad Powell and we get a bad non-farms, you could potentially break down to this next level, and the market will hold roughly around the 3,900 till it determines, okay, well, what's the core say? The core say we're really good. Well, then we start breaking back out. I don't see us making all-time highs at that point, but I can see us breaking and making another rerun for the 4,100. If not, you're looking, depending on how bad it is, you're looking at a breakdown of 3,800, and then if we have to apply a 50-point or 75, it could drop below that. That could be the gas that drops us and breaks us below the 3,800 and drop lower. Again, these are all based off of what the event is. That's why I'm not only technical, but I'm very event driven, and knowing what your economic schedule is and going based off of those. And they do help a lot, and what could potentially happen, when to stay out of the market, when to know when there's going to be a lot priced in. Something I do provide in the weekly update every week is the expected move. And that expected move, especially for options, tells you that they're predicting something to happen, and that the odds of that jumping up for options jump up dramatically when there's big events. And so you essentially can't make any money off those particular options if that's the case. And so it's better to look at other alternatives. I normally play SPX index, and normally during big event weeks, it's not even worth playing because there's so much priced in that you can't do anything. You can't make any profit. It's very hard to make profits off it. So it's easier to adjust and to find other potential ones that could cave. So if the inflation rate is really high, then you would look more at the tech industry as your Nvidias and Teslas that have been running 100 points over the past probably about almost a quarter here. And so those have a lot of meat on the bone, and they can lose a lot of that if that's the case. If it determines that rates have to be adjusted back to 50, then they could take a one hell of a haircut on a lot of tech again. Now, so a lot of tech's been pretty weak aside from Tesla and Nvidia are essentially holding up tech. So if they do give, again, they're going to be the biggest ones with the most meat on the bone. So we'll see. But again, tomorrow depends on when we land. But I'm really, again, watching that 420. If we want to start to push again, we've had a very big down sell here. So I wasn't really expecting a big more continued down sell. They are trying to project more so the rates, and so we're getting a little bit more selling. But again, I think the shorts are just kind of covering because we are going into a weekend, preparing for next week. So I think that's what we're kind of getting today, where we had this bigger green candle here. But again, I think we're going to be held at that 420 if we make it up to 420 tomorrow. And then, like I said, I think by end of day, we'll be underneath the 4K mark. If we open up below the 4K mark and it looks weak tomorrow, then we might just roll over and hold here between there and the 39.80 mark until we kind of see what happens. But with that being said, we'll take a look at Bitcoin real quick. Again, waiting on what will happen next. Again, there's a lot of consolidation. We saw this last year. Nothing exciting. We'll wait to see dollar trying to get strength, but again, we need data. Where is the Fed going? Where is inflation going? Inflation again starts rising. This thing's going to rip past again 105.70, and then going to make new highs, and then that's going to absolutely obliterate the market, especially globally as well, and the amount of damage that it does with the dollar being so strong. So we'll see. Tesla investor day was not good for Tesla, and as you can see, it did a retest on the daily here. So we could get, if this can't break back above roughly the 195 tomorrow, this could be a major issue for Tesla. It could start rolling over. Your next biggest support is roughly around here. We're on the 183 for breaks that, and you can have a pretty big drop from there. You do have some support here, roughly around 165, and then your big supports were down here at 140. I think Tesla's going to at least see 140 by the time this thing is over with, potentially even lower. Again, it depends on the gas, right? If we do have our inflation gets really nasty, and some things align, and once if the ducks do align, right, like this thing could really get some heavy downsell pressure and could see very much a new low and break past 100. But things need to align, but we don't know what those answers are yet. And that's what I'm saying, the next couple of weeks, this month is going to be very insightful to that and give us the information we'll need to kind of know how the rest of the year is going to be, especially if inflation starts rising. That core is going to be very pivotal for how we take the next steps. So again, a lot of things have been running hot because of only a 25-point basis move. So people started going and buying back because they thought it was going to recover. Now finding out it's not. So now we get the reality check. Is that reality check going to be a drop of the market is the big thing. So they're kind of watching there. But let's see. Nvidia, like I said, Nvidia is the other one I'm really watching. It did kind of have the support roughly around the So we'll see. Nvidia, like I said, it kind of bounced off the support here. Again, I don't really see it breaking past the 38 or the 239. Again, I think everything's just getting ready to roll over. Could be a good entry point if it wants to try to one last retest of the 239 before this whole thing starts to roll over. I think it's only a matter of time. I know it's been a pain to deal with this, but you have to understand that there's a lot of bond buying, emergency bond buying that is holding up the market and propping the market, or else we probably could be going a lot lower than we currently are. And that's been happening since this whole upticks in cycle that we've currently had. And so you have to be very mindful of that. It's been artificially held up to this point. And so again, I think the next couple quarters, Q2 and Q3, are going to be really nasty. And then you're going to get those reports, right? Those reports are delayed as well. So your Q2 earnings aren't going to be till Q3, and your Q3 earnings are going to be Q4. So you're going to see a lot of volatility, but I think you'll see a bottom at some point between the end of Q2 and Q3. And then at that point, then you would get a turnaround. And you'd still get some drops. I think the expectations for stocks are going to be pretty nasty. Like I said, the reporting and stuff is going to be nasty from those quarters. And then I think we can move on from there. And I think then we could potentially look. Again, it's really dependent on core. So you have to be adjustable to that and see where that goes and where that takes us from there. So BA, very strong. I thought this thing was going to die. This thing does not want to die. It's pushing right back up. So you're getting strength right back in BA. Again, I think this is very much artificially inflated. Like there's no reason for this thing to just keep holding like this. But again, the bonds, something's about ready to break. And just when you think you're about ready to get out of it, it's going to break and everything's going to collapse. And so you just, again, have to be very patient. The market shouldn't be holding where it is right now. And again, this emergency bond buying is a good reason for that. And again, JPM can't break out. Everything is waiting. And one thing I've always said is if you get multiple industries all looking the same, not so much healthcare. Again, healthcare really kind of just does its own thing. But once it's all looks the same, that means you're coming in for a big move, and it's typically a bad move. So that's what I am waiting for. I'm waiting for this final foot to drop. Is March the month? We have a lot of big pivotal events that if they line up, they could really drop the hammer on the markets pretty heavy. And so that's what I'm kind of waiting to see, because if you start getting Powell walking back, you start getting high core, you start getting more predictions of over 6, you're going to start really drawing some panic. And then that's going to be your bottom at the end of that, whatever that cycle looks like, once the fuel starts running out of there. And then I think at that point, you would have enough priced in for a potential black swan event that could occur. You might get a day where it drops 50, 100 points, and then that would pretty much be it from that point. But I think everything at that point would be finally priced in. But again, I think a lot of this was premature, and that's why we got this run up when we did. And it didn't help that the Fed fueled that by saying there was disinflation. This is why Powell has to be very selective on his words, or else you're moving markets when he talks. So he needs to be very careful about what he says, and that's why he's trying to be very generic in what he says. So with all that being said, that's pretty much it. Tomorrow's Friday. Manage risk. Let's make it in the next week. All you really got to do is survive. If you can survive this and not jump in and play the markets each and every day. The markets have been really nasty, playing really tight ranges. Wait for these events to play out, and then go from there. And until then, I'll see you guys in the weekly update. Later.